Now, for our stock of the day, a bit of news out this morning as far as the REITs are concerned. Shopping Centres Australia and Vicinity Centres, both companies out. SCA, they're snapping up 5 convenient shopping centres from Centuria's Prime West for $180 million, and Vicinity upgrading its full-year guidance with its preliminary valuations to the end of June, getting a $245 million boost. Now expects full-year funds from operations to be at or above 12.6 cents per security, saying the lift reflects the strength of the retail sales and improved negotiation outcomes with retailers. So, in that space, REITs, what do our experts think? And I guess given where the property market is going at the moment, bearing in also mind that I guess REITs tending to pay a higher dividend than your average stock, so that may be important, particularly during a recession. Gaurav, what are your thoughts?
What constitutes a high dividend has just been smashed because of coal producers, who I think are going to routinely pay sort of 30% yields or so for the next 12 months and maybe a little bit further than that. So I don't find REITs particularly attractive at the moment. One phenomena to be aware of is that as rates fell, cap rates, which is how properties are valued on the books of these businesses, they fell, and so property prices have expanded because of lower interest rates, and that's now going into reverse. So I don't think Vicinity and SCA are the real targets of this, but there's going to be a lot of property REITs, a lot of businesses who are recognizing higher property prices through their P&L, and all those gains are now going to have to reverse. So I'd be very, very cautious about jumping onto property REITs at the moment. The two you mentioned look okay. I think the consumer's in a bit of trouble, and not particularly bullish on retail, so I think it's going to be hard to pass on rent increases. But I don't view this as a source of any great opportunity. I don't think this is an area that's particularly interesting. I will single out, however, I think Brickworks, which owns one of the largest, the second largest segment in Brickworks is actually a industrial property portfolio. I think that is still kind of interesting. They are exposed to higher interest rates, and I do think they're going to recognize lower property prices running through their books. But they have an hugely expanding rental book that's coming through, and I think it's going to double in the next 5 or 6 years. And they're also sitting pretty with coal dividends. They own 26% of Soul Patts, which in turn owns a big chunk of New Hope Corporation, and I think coal dividends are going to flow from New Hope to Soul Patts into Brickworks and help offset any property losses. I think that's a nice little exposure in Brickworks, and the price is attractive right now too.
Okay, all right. So that's one to take a look at. Mathan, so yeah, to Gaurav's point, I guess if you're looking at that property space, retail, residential, we know that's going to be under pressure at the moment, but perhaps industrial maintaining relatively attractive compared with the others.
Well, yeah, I mean, I guess when the market is going down like this, you have to look at everything and look at it in its own aspect. The thing to remember, and Gaurav's right, if you look at REITs pre-GFC, it's the only sector that never actually surpassed the pre-GFC high, because they issue a lot of shares through the down cycle to basically hold themselves together and dilute themselves out. So the growth into the future gets diluted very quickly. And if you look at the pandemic, SCA just got up to that pre-pandemic level, and VCX is still below it. These things get diluted out. So the next recession cycle, you're going to get diluted again. So the cycle in property trust, and again, both of these things are remade into a new structure post-GFC. Why? Because as anyone would realize, if you had the price chart going back to most of these stocks, you'll see how it's a lot lower for most REIT stocks. So the reality here is REITs are a good investment after the recession. It's not a good investment going into a recession cycle. We are going into a recession cycle or a slowdown cycle. It doesn't have to be a recession, but that will hit. I was talking to a friend of mine who runs a small business in Met Center, and numerous stores there have not paid rent for nearly a year. So on the books, they look like they're doing well, but in reality, most of those guys are going to get into trouble, and most of them won't pay the rent. So the down cycle is coming. So this is not a time for REITs. As good as they've done, this is the cycle where you take your money and go somewhere else.
Okay, so that's a no, particularly. And SCA Vicinity, not interested?
No, I think, look, they're okay, but the problem is, as they said, when the water goes up, tide pushes everyone up, and when the water goes down, the tide gets everyone down. So these guys are going to struggle just as much.
Yeah, fair enough.